Hey everyone, Angus here. I just thought I'd make a video just for a bit of fun to show how you might be able to take an opposite position on gold, or if gold starts to really fall, how can you make money on the downside? So quite a few people are talking about gold at the moment. It's at these, crazy record highs, up around that 43.50 type mark. And, how long can it stay up there? There's a lot of sort of different economic factors that's causing the gold rush, for want of a better word. And at some stage, you could imagine that it's going to, fall off these highs and come back down. It could keep going up. So, this strategy of shorting gold, to take a trade on the downside when it goes down, is certainly a risky proposition. And the way that we're going to discuss it is, whether you want to use leverage or no leverage, and what that means for the outcome. And it's certainly a much riskier trade that 90% of people shouldn't take. And it's just more about me explaining, here's how you can look for these sorts of inverse trades, and as a stock trader, how you might be able to get in on the action, whether you want to chase gold up or chase gold down. It's up to you. But in this case, I'm thinking that there's probably an opportunity to make money on the downside. It's up so far. So if we looked at where it is right now, and we said if it came back to this sort of area, around here, that's about a 20% drop. If it got back to around there, and even if it just came back to somewhere around here, it might be a 10% drop. So it's just a question about whether you think it's going to go higher from here. And it does seem to keep on running. Like, it's incredible how every day it just goes up another couple of percent. It's a remarkable thing to see. So here we go. So I'll try and keep this short. So what we want to do is we want to go to the TradingView screener, which is just this button here. It looks like a bit like a radar screen, I guess. And so underneath here, you can see you've got your traditional stock screener, but we want to go to the ETF screener. The ETF screen will have a whole bunch of stuff in here already. I'm going to clear it out. I just like to have nothing in there. You can see there's 4,900, so near enough to 5,000, but 4,900 ETFs that you can choose from. And the way to think about an ETF is it's effectively buying a industry or a bundle of stocks. So instead of, as a stock trader, you buying individual stocks and hoping that those individual stocks go well, this is a tool where you can sort of almost take a trade on an industry. You can say, hope that the overall industry is going to go well. So I've got all these columns along here. There's too many. I want to get rid of some of these. So I'm going to say, well, price is okay. I don't, price is really that important to change. That's your last change since the close of the previous day. Price volume. So I don't care about price volume. I'm going to get rid of that. Relative volume can sometimes be interesting. The assets under management is good. That's a bit like your capex to some extent. Going to get rid of that one. Going to get rid of that one. With easy ETFs, they do cost you money, but that's sort of fairly immaterial compared to the trade that you're going to try and make. Asset class, I'm going to get rid of that one. And this focus one here is good. This is one of the ones we want to use because we're looking for gold. We want to focus on gold. So we can only sort it. We can't filter on it, which is annoying. So what we need to do is go up here. We're going to go and add a filter called focus. And we're going to change that to gold. And so we've got 4,900 ETFs. Going to click on gold. And now we've only got 31 that we have to deal with. The other thing I want to do is I want to add performance. And the only way that I know that these exist is literally by going through every single thing in the drop down and having a look and working out what they all do. I'm going to say that the last 3 months. So gold's really only run probably over the last couple of months, but it's run really, really well. Well, I mean, it's been running for a long time, but particularly in the last couple of months. So I'm going to go add column. And so I'm going to sort it by highest to lowest. And so you can see here, like crazy, this one's up 96% over the last 3 months. And just to show you what that means, if I shrink this back down, and forget about the last 3 months, but if I even just say, well, where's it run from, from here to roughly there, you can see it's only up probably around 30%-ish. And so even if I went back to here, it's still only up roughly 30%. So how on earth does it go from being 30% there to one of these ETFs where it's up 96%? And so you'll find that this is what's called a leveraged ETF. And so this is probably a 3 times leveraged ETF. So see over here, it talks about microsectors gold, 3 times leveraged, effectively an ETF. And so it's an ETN, but let's pretend it's called an ETF. And so if I look at the information about it, I scroll down here somewhere and I read about what its description is. So it'll say shiny, or SHMY, exchange traded note, debt obligation of the Bank of Montreal provides 3 times leveraged daily exposure to the performance of blah, blah, blah. So this is saying it's a 3 times leveraged ETN. Underlying fund is the first ETF to invest directly in physical gold, blah, blah, blah. So, it's interesting, that's what this one does. And so, if you'd bought somewhere around here and you thought, wow, I know that gold's going to go really well, you can buy one of these 3 times leveraged ETFs and, it triples your money, so every dollar you spend, you get 3 back, while it's going up. But the best thing that I can tell you to do is go and look up Google or, your favorite AI probably, go and look up ChatGPT or Gemini or DeepSeek or Grok or whichever one you use and ask it about leveraged ETFs and ask it about the danger of using leveraged ETFs. The way that they work is even though they look great on the surface, they erode your gains very quickly. And so it's a bit like when you're trading stocks, and most of you know this. Like if a stock goes down, let's say 50%, then it needs to go back up 100% for you just to break even. And so with these leveraged ones, if it goes down $1, you drop your $3. But if it goes up $1, you don't get your $3 back. You might get $2.50, $2.70, $2.80, whatever the maths works out to be. So if it's sort of stepping up and stepping down, stepping up and stepping down, and even worse if it's going sideways, you very quickly erode your gains. So just be aware that leveraged ETFs do carry inherent danger. So let's switch this around. So instead of it being sorted by that way, let's see what these ones are like. And so over the last 3 months, this one's lost 53%. This one's lost 38%, or gone down by close to 40, close to 50%. And so this will probably be a 3 times leveraged ETF, which it is, so 3x. If I go down and read its description down here, it's 3 times daily inverse, which means it's backing it if it goes down. Leverage exposure to the performance of the SPDR Gold Shares Trust. So it means if gold goes up, this one goes down. But likewise, if gold goes down, this one goes up. And so this is a 3 times leveraged ETF. This one here, I'm sure, is a 2 times. So see here, it says ultra short gold. Let's read the description. And see down here, I'm sure it's 2 times. See how it says 2 times exposure if held longer than 1 day. It's talking about here, if it's, can vary significantly from the headline -2% if held over multiple days, and that's because that sort of erosion factor. But anyway, so this one here I think is also a 2 times leveraged ETF, double short, and this one here is a 1 times leveraged ETF, so it doesn't have that same sort of exposure to decay as some of these leveraged ones. But you can see here, here's where the money is. So, this assets under management tells you the sort of size, I guess, of the fund or how much interest it has in it, if you want to think about it from that point of view. And so you can see here, this one's got 7 million in it, so highly risky, being 3 times. This one's got 114 million in it, so this one's perhaps a little bit more attractive. 1.16, 1.75, and so there's more in it. That's where more of the money sits, I guess. Just in terms of how much they've got invested. But for your point of view, it doesn't really matter. It's just looking at this number here and working out if this starts to go down. Maybe I'd like to have a little bit in GLL, and so you can basically go to your broker and see which ones are available. Not all brokers cover all of these ETFs or ETNs. You might find that your broker does GLL, but it doesn't do DUL or it doesn't do DZZ. But anyway, if you're wanting to take an opposite bet on the direction of gold at the moment, then this is how you can do it as a stock trader without having to overthink about, CFDs and, all sorts of different stuff. So if I go back to gold, crazy high, is it going to come down? And if it does, is one of these, you know, gold ETFs, something that might be attractive to you. And again, if it did fall all the way back to here and you thought it was going to run again for whatever reason, then you might buy one of those, you know, leveraged gold ETFs that allow you to, you know, bet on the upside. So that's my 2 cents on perhaps how to take a different position to the market on gold at the moment. But it'll be fascinating to see where it ends up going. You know, there's people saying it could go to 5,000. There's a couple of people saying it could go to 10,000. That'd be nuts. At some stage, we're going to see a pullback, and it's just a matter of what economic conditions, you know, bring that about. Gold's very much a, you know, let's call it gold's effectively an inverse position to the US dollar. You know, if the US dollar goes up, gold goes down. If the US dollar goes down, gold goes up. But there's a whole bunch of other factors that I'll list in the description that, you know, could be causing the rally, and it's just a matter of how many of those get undone before gold starts to reverse its position. But it's been running hard and it's been running well, and it's, you know, at a crazy, crazy level. So who knows where it's going to go next. Anyway, thank you very much for listening.